Crypto. I hope you haven't been sleeping on this one. AGIX is blasting today, up 30%. This coin has a circulating supply of 1.2 billion out of a maximum supply of 2 billion. Current market cap is sitting at 618 million, and we're up to 51 cents today. Look at this beautiful candle we got on the daily. Now, it does have a lot of wick coming down, so there is some sell pressure that was taken right up here as we reached 52 cents, pushing the price down to this 382 Fibonacci level that we got at about 43.3 cents. If it comes down to that area, you might want to think about possibly picking up a little bit. It is likely to come down and touch this 21-day moving average at about 42.2 cents. We can see how price has been respecting this trend line up until this point. When we broke through to the bottom, things were looking a little shaky for AGIX. It came down to about 28 cents, which is an excellent time to pick this up, and I hope you guys did. This proved out to be a bear trap as we broke back into this pattern. Currently, the pattern going on the daily from candle close to candle close, we are kind of making an ascending triangle type pattern. Now, for the more conservative people, the best entry for this would be to wait for a price breakout of this level, which would be about 53 cents. You would get a bounce there, and that would confirm that that support resistance has flipped, enter the trade, and then you can be looking for some more upside. That is the most conservative entry. However, a lot of us more experienced traders love to get in at these bottom prices and also at the bottom of this trend line. Now, if you were to take this trade at this 382 level, about 43.3 cents, and hit the first target, your return on investment would be 38% return. Risk-reward ratio is fair at 2.89%. Now, our second target would be 67.5 cents, which comes up just a little bit above our last high here. Now, that would give you a 55% return. Your risk-reward ratio is looking pretty juicy right there at 4.11, putting the stop loss under this 9-day moving average. Because if we break below that 9-day moving average, start touching to the 50, it's a possibility we could be coming back to the downside, that we'd be flirting with breaking this line. We don't want to see that. So, in my mind, that's a fair place to put a stop loss at 13%. Now, I do have a higher target at 74.9 cents. This is a Fibonacci area taken from a trend extension. Very high likelihood this is our very first main target. This would give you a 72% return, risk-to-reward ratio of 5.4. Now, I do have some higher targets, and we'll get to those in just a minute, and those are more for a longer-term hold, which is probably a good idea for this coin. In my personal opinion, I picked it up around 5 cents. Quickly taking a look at the indicators on the daily, we got the go-ahead a couple of days ago with this beautiful green dot on market cipher right here. Now, as you can see, stochastics are heading to the upside, have plenty of room to get up there. Might start seeing a hiccup right around here of about the 79-80% level. Money flow has dropped off, but it's still there and looks like it's possibly starting to go to the upside, which is a very good sign. Momentum wave is coming to the upside too. MACD is starting to look beautiful. Histogram is starting to go to the zero line. Eventually, we will get that bullish cross. That will be your official buy signal when you see the blue line cross over that red line and the histogram flips from being purple to blue. Now, if you notice right here where we had this bottom, but come down here to the RSI, take that, draw a line to its bottom over here, you can see that this is slanted down, that is slanted up. Tells you that when it finds a stopping place, that this trend will continue. The trend is to the upside, so the bounce was to the upside. Good sign for AGIX. Just bouncing down to the 4-hour, we can see that we have crossed over this 200 moving average on the 4-hour. That's very bullish. That's the point that you want to buy. Now, we can see also that we got some crosses here of the 100 and the 200. This is a very firm support level here at 41.9 cents. Looking at it on the smaller time frames allows you to nail your entry more closer. So that is definitely the point that I would look at, just right shy of 42 cents. You can see on the 4-hour, we broke up through this red Ichimoku cloud, which is nice and thick. You probably cannot see this, but there's a very tiny sliver of green here that is showing us we've got some room for some upside here. Even though the stochastics are extended on the 4-hour, they can get pinned to the top. Momentum flow is still coming up. Money flow is starting to come in. There definitely can be a pullback down to these areas. I would keep that in mind if you are looking for an entry. And flipping back to the daily still looks very bullish to me. The only concern that I have is that if we do not make a close outside of this green cloud, it could draw us back in. If we see that, if we break back below this trend line, you could consider cutting your trade early, just as a safeguard. We don't want this to spit us back out on the bottom side of this green cloud. However, at the moment, things are looking very bullish with our indicators, with the divergence, that we've got a good shot to come up to the top of this at 52.2 cents, break to the upside, flip it as support, go to some higher target. Now, let's check out these higher targets for longer term trade scenarios. One thing we can do with this particular shape is to take a measured move. That measured move takes us up to this area, which is also a Fibonacci area. So looking just right under $1, about 98 to 99 cents. We will get a hiccup there. That is probably where we'll find some rejection, great place to take some profit. Now, taking profit at this area, if you get in at the area that we talked about before, about 42 cents, 125% return, risk reward ratio 9.4, truly excellent. Some of the other targets that you can look at on the way up to that point would be 86 cents and 92.2 cents. And for guys like me looking for more longer term targets, looking at $1.15, $1.25, and the main target being $1.38, 1618 Fibonacci area. And just quickly taking an extended measure move, this one's a long shot for it, but it has a good opportunity to play out over time. Just takes a while to get here, and that brings us up to this first area, about $1.14. Those are some excellent targets to take some profit, wait for price to do a correction, and then load up your bags again, wash, rinse, repeat. This has been an excellent coin to trade, and especially if you trade it in the Bitcoin pairs, it's been a great way to double and triple your Bitcoin. If you found this information helpful, hit the like and subscribe. Check out our Telegram group where all the cool kids are hanging out, learning how to trade the charts. And until next time, my name is Lane, your crypto road dog, reminding you you're in crypto at the right time, and you got this, baby.
Some call him the Nostradamus of crypto. His charting skills have discovered new entire galaxies. He once was engaged to Satoshi Nakamoto's oldest sister. He is the most interesting trader in the world. And today we ask him, what do you do when the market crashes?
I buy more. And I also subscribe to Road Dog Crypto. Trade wisely, my friends.